With the market in euphoria, Palantir is in the biggest bull run of its history, and that is a very encouraging sign for anyone part of the adventure. As one of the most traded and volatile tech stocks in the deepest capital pool of the world, Palantir has always been a very popular pick for the traders. Now that it's on a rocket ship, many people are wondering whether this is their moment to step in and ride it all the way to the moon. There are often a lot of confusion and questions about the company, but the fear of missing out is getting the best of most. Whether you like or hate it, Palantir has always been an interesting stock for the right reasons. Hey everyone, I hope that you're having a wonderful time with a lot of profitable trades. In this video, we will talk about Palantir and see if it can make you a lot of money. As the share price maintains itself above the $60 level, it is another significant milestone that has been reached for a stock that was just trading below $10 not that long ago. Break-even and profitability first helped its fortune, and then the AI craze led to the rest. Palantir is now officially part of the major league, attracting ever more mainstream interest, and has entered into the price discovery phase, where the sky isn't the limit. The market wanted a comeback, or at the very least, a recovery, and what we're witnessing right now is a triumph. With the financial landscape moving thick and fast, for the better or worse, it wouldn't be surprising at all if they will make new highs in the month to come. Volatility is a very sharp double-edged sword. It's just that this time it works for us. As one of the most symbolic public companies in the brave new world, Palantir has been keeping the market's hope up to offer a safe haven for anyone to commit their assets in equities. AI isn't mankind's salvation from itself just yet, but Palantir shareholders certainly hope this will be theirs. Over the past few years, more than yet another tech stock begging for our money in exchange of empty promises, Palantir is now a major player in the sector that can tell us a lot about the market appetite for risk exposure, and if the tide is ready to raise all ships once again. The company has enough reputation and prestige to trigger the market's curiosity, as well as people's tendency to follow popular trends. It is a company that people would often view equally as the risk appetite of the market, alongside others like Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves makes it a very intriguing company to analyze and to perhaps invest in. In this video, we will take a deep dive into Palantir and see if it deserves to have a place in your portfolio. Before the video continues, I just want to take a moment to thank each one of you for coming to my channel and hope that you will enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for more content about Palantir and other companies I may cover. With that being said, I hope you're gonna like today's video, and let's continue. Let's begin with the price action. Palantir had a very good run recently, and it doesn't show any sign of slowing down. The market believes that Palantir still has a lot more room on the way up, now that the 2021 peak of $35.21 that went at the same level that a lot of people took profit on, assuming that it's never going to get past, is left very far behind us. Since there's no actual resistance ahead, Palantir shares are still looking for where the share price is actually going to land, and the fact that this process is ongoing is very encouraging for people who want to speculate on the ongoing bullish run. The recent news have been very good and bullish for the company as well, whether it's the elections results, the end of conflicts around the world, or the company's own fundamentals. The shares opened at $73.28, reaching a high of $75.32 and a low of $71.70 before closing at $75.75. There's an increase of 5% in share price over the past 5 days, with a weighted alpha of 255. In terms of volume, the past few days saw a lot of activities that came with the ongoing volatilities. The daily average is around 75 million shares, with a 30-day average of 78 million shares. Regarding the current pullback, a possible answer can be found in the correlation between tech and crypto assets, or I want to say the people who trade those assets, where a significant amount of traders took profits when Bitcoin has reached 100,000. I'm not saying that there's a 100%, positive correlation between those two. However, we got to remember that the behavior might be very similar. Beyond that, there's not much to mention, probably because there isn't much to actually comment on to begin with. Let's remember that some slight pullback is normal looking forward, and it should be expected because many of us, and it's a healthy thing to do, may take profit on the way up. The market consensus continues recommending a buy, with the moving averages recommending a strong buy. The current trend continues to be bullish as the recent price action is traded above all simple and exponential moving averages. With that being said, the RSI recommends selling the shares, probably due to the magnitude of gains accumulated so far. Like we said before, the current price action is a logical reaction of the US election results. Peter Thiel, one of the founders of Palantir, has long showed support the president-elect. The company has been cultivating its relationships with the state for a long time, especially regarding defense, law and order, and border control, all of which happen to be very high on the Republican agenda. Despite the fact that this company also has contacts with the Democrats, from an ideological standpoint, Palantir is able to side more with the new realities based on the interviews given by both Peter Thiel and Alex Karp. From a media perspective, news articles around Palantir remain positive, with a few voices suggesting caution given the magnitude of gains within such a short period of time, as well as the valuation model, with others suggesting that Palantir, on the contrary, may be on the verge of massive growth, given the election results, mounting pressure from Wall Street for the interest rates to come down, for the equity prices to go back up, and a possible stars alignment for the tech and crypto scenes. Given the Q3 results being positive, it's also understandable that the news coverage has been very encouraging as well. There are some worries regarding the stock might be overbought, pushed by the company's own fundamentals, but also the eagerness of investors to find a refuge in an uncertain environment. Usually the news articles are not worth analyzing one by one, and it's no exception here. The overall tone, on the other hand, is, because it sets the overall tone of the landscape, and can also give us a forerunning sign of the trend continuation or reversal. The stock's price action has been able to hold itself well above the $50 and $60 level so far, while looking for new horizons in the current phase. A lot of people have been looking to find a decent entry point to make a comeback to the equities market, and the Japanese market provided them the last opportunity to enter a trade below $30. Given the composition of its shareholder base being more retail than institutional, Palantir has always been a stock made of momentum and a large dose of anticipation and self-fulfilling prophecy, instead of level-headed analysis of the actual numbers. We're not here to buy Palantir that already is, but to own the Palantir that people hope will eventually become in the next few decades. Any rational analysis of its current financial results may justify the short-term price actions and maintain price actions to a high baseline, but not to push its current valuations to new peaks, or to the very least, not to the extent people wish to trade Palantir for in the first place. We can see that the market reacts far more significantly to announcements related to momentums and gains rather than the actual numbers of the present. To a fault, Palantir remains heavily dependent to the public sector, and it certainly shows in the price actions and our reactions. Looking back, the region with a lot of support has been identified around $45, above which we're now entering in the price discovery phase, providing a huge amount of stability to its price movements. These levels will serve as important markers for us, indicating potential areas of price reversal or continuation that have now been passed through, and the fact that they have been tested and successfully defended. The price action of Palantir further highlights the company's own potential. The current consensus surrounding Palantir is that the market wants to keep the party going, and they're looking for more clarification from the shareholders before they want to make even bigger move. Because a lot of people believe that the world economy might be in a fragile position after years of uncertainties, conflicts, and shutdown. We've been having inflation for years at this point, and I believe that things may start to accelerate in the year to come, so we should definitely get ready for that. Palantir is a tech company created back in 2003 and went public in late 2020 at the peak of the last market boom. It operates in the data analytics subsector of the tech space and has been one of the leading companies in that area. It is known for its position taking, the relationships with public sector actors, and its engagement of key members such as Peter Thiel and Alex Karp. Another aspect that sets itself apart from many of its rivals is its proximity with the intelligence community, as the company relied on seed funding from the agencies back in the earlier days. No one ever shouts from the rooftop that they want to do evil, but Palantir certainly doesn't shy away from more delicate situations by working with public sector agencies in legal, healthcare, border control, defense, and law enforcement. Simply put, it is a company that doesn't mind being portrayed as evil and almost wears it as a medal of honor. In fact, shortly after it went public, Palantir decided to move its headquarters from the Silicon Valley to Denver, Colorado. This move was more than a pursuit of lower overhead or a change of scenery, but a statement about the public image it wants to portray. The market has always shown a lot of interest in how the company and the stock are doing. The fact that it went public when the bullish sentiment was sky high in the tech sector could have been a contributing factor, as the world was preparing for a fundamental change about how societies would function in a place where more interconnectivity happens while remaining remote from anybody in the physical world, a technological and societal utopia that was deeply flawed and never truly came to be. Palantir shares attracted the market's attention mostly because its narrative was the right fit in the right time, as the tail end of the quantitative easing era mentality combined with the pandemic era dream of interconnectivity and never-ending financial boom, while capital was looking for a safe haven from the uncertainty and the collapse of the real-world economy outside of our screens. In a way, Palantir symbolized the answer we wanted to slap on all our problems, and for some time it was made true by the supply and demand of modern finance. We are interested in Palantir's promise of reaching ever higher price levels, a promise that seemed set in stone when large quantities of money were pouring in a company with deep pockets backing it up, as the world was preparing to enter in a new era of endless growth and prosperity. This bullish and very optimistic narrative about Palantir has been backed up by the numbers. Financial information has been known to move the market as stakeholders want to have their assumptions validated by something concrete. Gross margins, cash flows, and revenue growth are some of the most sought-after data points that people want to know about Palantir when they do their analysis. The growth margin measures how profitable Palantir truly is at the core. Beyond the quality of its marketing campaigns, the hype around its projects, or its brand power, gross margin tells us whether there is enough demand for what the company is selling, and if each additional dollar covers the additional expense that the same dollar generates alongside. To that end, Palantir is a very successful company with a decent profit margin, even when the shares were trading below $10 during the last sell-off period. This was the first sign that Palantir is more than just an empty promise begging for your money. The business model is something that can be scaled up and marked up, because it has true fundamental value and it is validated by the market and its clients. Once the core business model has been validated, cash flows tell us whether Palantir will need to go through cash injections to keep its operations going. And very often, a tech startup may ask shareholders to pitch in even after they bought the shares, because the funds collected from equity sale is not enough to cover the operating expenses. If that were the case, it would be a sign of weakness from the company, because it would mean that the company's own operations are not profitable enough to stand on its own 2 feet. For Palantir, that problem is also non-existent, because its cash flows have been positive for quite some month, mostly because its operations are profitable and it doesn't need to dilute its shareholders to keep the lights on. However, these numbers are not enough to push Palantir higher. The most important factor is the growth rate of revenue, especially from public sector. Like many other tech companies listed on a Nasdaq, people buying Palantir want to buy the powerhouse to become, not the decently profitable company that is. This would also explain the high multiplier that Palantir is currently enjoying compared to many other blue chips companies in more mature sectors. This is a double-edged sword for those who want to dabble in the tech field in general, but for Palantir, the public sector aspect is an additional side to watch for. Since most of its growth does come from the public, any additional partnership with healthcare, defense, or law enforcement departments may trigger massive upsides for its shares. On the flip side of the coin, every time an existing partnership ends or a scandal makes it to the headlines, Palantir shares may see a dip that could take a few days to come back from. These 3 measures are what define Palantir and may explain its dynamics in the market in general. It is an interesting company that people are putting a lot of hope into because its financial results are good and do suggest that Palantir has the potential that people claim it does. Because Palantir is a highly specialized and unique company that is praised for its technical expertise and noticed for its position taking by its management and shareholders, it's always been the center of a lot of interest, talks, and speculations from the market stakeholders, as well as the media outlets. Along with Nvidia and Tesla, it's probably one of the most talked about companies in the world, despite the fact that it has a much lower market cap than many other blue chips companies. Hardly any day goes by without an article to be written by major media outlets about how Palantir is doing, or where they believe it's going to land. The coverage can be relevant in 2 ways for our analysis. The articles can give us a feeling or a sense of what is the current market consensus about what happened, and the mood that is the most likely to influence what's going to happen next. Their tone is often determined by the price action at that time and plays the role of current trends amplifiers rather than contrarians showcasing potential trend reversals. Even if it's not a crystal ball allowing you to see where the price is going to go next, it can always tell you what the current sentiment is, which may allow you to take a hint of what the next move may be. The second level of analysis is more basic, but also more useful. It is not about the content but the quantity of the coverage. Depending on the number of articles written about Palantir as well as who writes about it, we can have a rough estimate of how popular the company, the narrative, and the sector are in people's mind. Alongside the potential upsides, entire economies may benefit from this as part of trickle-down liquidity from risk-seeking capital. Ultimately, papers want to sell clicks, just like investors want to get alpha. If there are shining bubbles in the market, news outlets are usually very fast to pick them up, validating the overall direction of any subsequent bull runs. The number of articles currently indicates that the market is interested in what happens with Palantir, and the anticipation is a further increase in price when the interest rates begin to decrease and fall. We just have to be careful about the limit of analyzing news articles, as they tend to describe the direction the wind is currently blowing, but far less effective when it comes to predicting where things are going to go next. Now, obviously, since you're looking up about Palantir, chances are there are unique aspects piquing your interest. Trading or investing in Palantir does come with its own upsides, including its unique profile, its potential growth rates, and the existing stability. Palantir is a company operating in the data analytics subsector, which is a very promising place, lots of favorable talking points and potential vectors for future growth going forward. The world is getting more digital and analytical on a daily basis, as more and more business decisions will need data-driven information in order to make that call, as well as to optimize daily operations and locate the trends of the future. Palantir has been trading for a few years, but its existence dates back more than a decade ago, and its expertise does bring it head and shoulders above many of its rivals. It has deep relationships with deep-pocketed public sector departments in defense, law enforcement, and healthcare that we talked about, all of which require Palantir's digital solutions for their planning and decision-making. Unlike many of the Silicon Valley unicorns, Palantir also doesn't pretend that it doesn't do any evil or that it lives in a perfect world. The HQ move to Denver, along with the Davos speeches of its CEO Alex Karp, do suggest that Palantir is willing to take on the challenges of the future and that it's not afraid to say so out loud. The relationships established by Alex Karp and Peter Thiel, two of the founding members of Palantir, have opened many doors in both public and private sectors, allowing Palantir to cruise on the trends. Recently, it also announced that it's going to participate in the trending AI field, which is one of the main reasons for the stock to go from $15 to $30. In addition to all this, Palantir does have a layer of stability that many of its rivals don't have, and that can be seen in its cash flows. Palantir's cash flows have been in the positive for some time already, which is a rare advantage above many of its competitors because it means that a company can sustain itself in terms of the needs and doesn't have to beg investors for more cash injections in exchange of dilutions. With that being said, investing in Palantir also comes with a few unique downsides due to its company profile and the characters of the sector itself. Being a company that analyzes data for a living, Palantir will be more exposed to potential legal problems compared to other industries. Since the topic of data privacy, ownership, and proper usage have been under heavy scrutiny from the past scandals with social media, how Palantir acquires, processes, and safekeeps those data while serving its clients can be open to legal battles, which may cost the company its image, reputation, its bottom line, as well as future opportunities to get more contracts from government agencies, the same agencies that may require these data that were maybe used under inappropriate circumstances. It's a bit ironic, but that's probably the way it's gonna go. My theory is that since this is a touchy, delicate area of this economy, and no one wants to rock the boat, meaning no one wants to take on the blame if anything bad actually happens, in that case it's possible that Palantir may take on the loss without having the capacity to shift any of the blame to other stakeholders, because if they do that, they're going to rat on other people, and maybe they don't have the opportunity or the luxury of doing this. The other thing to consider is the potential decay of the narrative's value. AI and data analytics are very popular topics now. They're trending in the market, that's for sure. But what would happen if they stop being so popular once a newer sector has been created out of thin air or come back from disgrace? If we look at what happened with electric vehicles, we may see a similar drop in interest for data and AI, along with a potential drop in their market cap value for companies like Palantir. So what these additional risk factors mean for anyone really looking into buying Palantir is that it is a blue chip sized tech stock with the volatility, or arguably with the volatility of a startup, mostly held by retails. Trading comes at a significant potential price volatility cost, and investing does require a fairly high tolerance of uncertainty. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Having said all this, my recommendation for Palantir remains consistent with what I've said before, with one little nuance. I would say that given that we are mostly in the price discovery phase right now, it wouldn't be surprising if we're not going to pullback anytime soon. So while it is very important to keep your pace for purchase at a consistent and relatively low debit kind of rate, it's also very important to keep some sort of footprint in Palantir, meaning you must have a certain position to have like skin in the game. Now, the share price does look a bit steep, so even if there are pullbacks, we shouldn't be surprised. But we should have like one of the scenarios in which at least Palantir will not be pulling back anytime soon, and we should be fine with this as well. I would recommend a maximum exposure of 8 to 10% of your portfolio in Palantir and to gradually purchase it over the next 18 months.